Let's dive right into this week's Stock Market Explainer, cutting straight through the noise to the numbers.
We'll quickly cover the weekend review, macro drivers, sector rotation, the economy, and your investor takeaways.
The bottom line, the Nasdaq surged 4.5% and the S&P hit record territory.
Check out this massive divergence, guys. The tech-heavy Nasdaq soared while the Dow basically flatlined. Geopolitics drove early volatility. U.S. and Iran hostilities initially spiked crude oil before the markets cooled down. The UAE intercepted missiles, and U.S. ships were targeted, which really threatened Middle East supply chains. But optimism returned midweek when President Trump suspended U.S. naval escorts as negotiations actually progressed. By Friday, crude settled around $95. That removed a massive macro headwind for equities. This sparked a huge rotation. Investors aggressively dumped energy and utilities to load up on semiconductors. The catalyst here? Absolute AI mania and spectacular earnings from mega-cap chipmakers like NVIDIA and AMD.
Real-world capital is flowing fast, highlighted by Anthropic's massive $1.8 billion cloud commitment.
Shifting to the economy, we saw some cracks. The April report added just 115,000 jobs. Despite inflation fears, bond markets stayed surprisingly calm. The 10-year Treasury yield actually settled lower. The biggest red flag is wage growth. Real earnings rose a measly 0.3%. Because of that, consumer sentiment took a major hit, dropping down to 48.2. The takeaway? Everyday consumers are feeling the pressure, which creates huge risks for future discretionary spending. Yet Wall Street is basically ignoring the stressed consumer, totally captivated by those robust AI earnings. So here's the ultimate question. Can this AI enthusiasm keep outrunning economic gravity next week?